Hello friends, how are you? We are going to see now one more aspect of cash management for increase in sales. How much cash is required? Some people have a wrong notion that by increasing sales you can increase your cash resources, but it is not true. But in fact, by increasing cash, by increasing sales, you require additional cash. So this is one such example where you can calculate how much cash is required, because cash you have to make arrangements, because otherwise raw materials will not be supplied. You cannot make payment to supply in time. Once if you don't make supply a payment in time, further consignment of goods will not be given to you. The production will be hampered, sales will be stopped, production will be stopped. You won't be able to achieve the sales target. You won't be able to achieve the profit target, etc. So all this will come as a chain. So as I told you, it is only circulating capital. You have to be very, very careful. You have to make alternate source of cash from either bank or from other lines of other sources, so that activity goes unhindered without any interruption, without any gap. Because then only you will be able to achieve the targets and profits. Okay, so very important. So for every increase in sales, you require some extra cash. Extra cash. This we are going to see now. That example. You watch and be blessed, and tell your friends to watch my sessions also, and subscribe to my channel. Okay, so let us go to the session. So in this case, how much cash is required to support an increase in sales? So there is some information is required. If you are getting the information, you will be able to do it. For example, formula. One formula is there. New sales. What is the additional sales you are going to make? Okay. So minus gross profit, because you have to reduce the gross profit. We are not taking into account anywhere, because we are not financing gross profit. Only we are more worried about the additional cost incurred on account of increase in sales. Okay. So profit you are reducing it. Then extra, on account of increase your extra sales, what is the extra expenditure, extra overheads? The sales and new sales will increase, will include raw materials, etc. But additional overhead expenses like office expenses, extra wages, extra working hours, extra freight, extra other charges, etc. So you have to find out. So into what is the average collection period? What is the average collection you are going to give? Average collection period. Supposing you are giving on credit sales. Supposing it takes 47 days. In this case, 47 days. So you won't be getting the money exactly on 47th day. So you will they will be here and there. They will make some payments. So exactly you can take 47. So you have to add some contingency, some extra provision. So that's why we have made it into 1.20. In this example, it is 47 days. So into 1.20 means instead of 47 days, we are giving 56 days. We are giving 56 days. Okay, like take 10 days here and there. They will make payment. Okay, so exactly 47 days, nobody will come and pay. So they will little pay earlier, somebody pay little later also. But average, what will comes around the exigency, 1.20 into 56 days. 47 into 1.20 equal to 56 days average collection period. Party who has to give money to you, he will pay on the 56th day. Okay, that is how we understand. Then divided by 365 days for yearly, for converting into yearly. The time frame in days for adding sales, 360 throughout the year, 360 days. It will go on, you will adding it, again you are getting the cash, again you are adding it, like that. So you will have the operating cycle, it goes, comes, and we have a rotation there. You have the rotation there. So, but any point of time, how much cash is required? That is what we are going to arrive at any point of time. It is only circulating nature. That's why it's called the circulating capital. Cash is also current asset. It is circulating capital. It goes, again we require cash, we borrow it, again we put in the business, get the cash, again put in the business, like that it goes. So we need till such time, till there's a gap in getting the receipt from your customers. Somebody has to finance, the bank will finance, and you will rotate the money, and then moment the customer pay to the bank, then again avail it, again produce the goods, again sell it, get the cash, you pay to the bank, like that. So it goes routine. So that you know already, operating cycle we already discussed. So in this case, the increase in sales is 75,000. Gross profit they are saying 30%. Okay. So average collection is 47 days. Additional expenditure on account of increase in sales 75,000 is 21,300. So now first in the formula, you see this formula. This actually you have to see what is the new sales, 75,000. Okay. So what is the gross profit into 30%? 30% is the gross profit, 22,500. Okay. Plus what is the additional expenditure required on account of increase in sales equal to 21,300. So totally 17,800 is the cost of increasing the sales or production. Cost of increasing the sales or production is 70,800. So this is the amount will be always held up with the customers because you are going to give it on credit. Okay, cash is not a problem. So it's 70,800. So we want to convert into 56 days. So simple calculation into 56 divided by 365 or 360 divided by 365. What is the per day receivable amount? 202. For how many days it will be held up? 56 days. What is the amount? 11,404. So 11,404 is cash required to support this increase in 75,000 sales. You see, understand what I'm saying? Because 11,404 is a cash required because this rotation, this 70,800, he rotated almost 7 times. Okay, almost 7 times. Per cycle, 11,404 cash is required. Okay, so this is for the annual. 70,800 is annual. So it goes almost 7 times turnover, 7 time operating cycle. Okay, you understand? So one each cycle, how much cash is required? 11,404. So additional cash is required. Normal sale, leave it. For additional sales, for 75,000, you recover 11,404 per cycle. So you have to make arrangements from the bank to get this additional cash 11,404. If you are not making arrangements, this 75,000, I don't think you will be able to achieve it. So by the time one cycle is over, next payment, if supplier will be expecting next payment when you're not able to make payment because you are not making arrangements for the payment, then you will not supply goods and the entire target will not be achieved. The entire target will not be achieved, your target will fail, you will come short of your targets and the profits also will come down. So try to make arrangements for this 11,404 cash per cycle from anybody, from the bank is required. Then you can achieve, so for 7 rotations, you can achieve 75,000 in additional sales. So got the point? Simply by this formula, I'm again telling you, new sales minus gross profit plus extra overdues into average collection period into 1.20. We are taking some exigencies, 1.20 exigencies. You will not pay exactly 47 days, so we take it at 56 days. Okay. So into 365 divided by 365. So how much you are getting? 11,404. So 11,404 will be rotated 7 times because 73,800 annual expenditure on account of increasing sales. But rotation is the one cash required for one rotation is 11,404. So 7 in a year, 7 times rotation will take place. So if you make 11,404 arrangement from the bank, then you will be able to achieve the target of 70,000. Just go through once again, it will be very easy for you. There is nothing difficult, you can understand easily and tell your friends also. And you always write to me what you want. I can actually, it's with all great insight I'm doing these videos because of what you require. I cannot produce, I cannot put videos on all things that I know. That will be of no use to you. So take care and be blessed. Thank you, friends. Take care. Thank you.